So let's check out how the week ended on Wall Street. Over to Jayne Edwards. Jayne.
Thanks, Alan. Wall Street investors didn't know which way to go on Friday as the share market limped to the end of its worst week in 2 months. The Dow closed slightly higher, the broader market went nowhere, and the Nasdaq fell a bit, but none of the moves were decisive. The focus remains on Europe, where Italian and Spanish bond yields eased slightly amid unconfirmed reports that a deal was being brokered to allow the European Central Bank to fund future bailouts through the IMF, a move that would reassure skittish financial markets. But there's now also renewed nervousness across in the US about debt negotiations in Washington, with a Wednesday deadline looming for a bickering congressional committee to come up with budget cuts and tax increases. With all the uncertainty, the Australian dollar was left hovering just above parity with the greenback. Looking at world markets, all slumped over the week, notching up losses of between 2 and 4% after consecutive days in the red. Now, with all the Australian share market news, here's Tom Elliott.
Well, as you just heard, the Australian share market endured another soft week. Not really all that surprising when you consider the turmoil that continues to come out of Europe. There was a fair bit of corporate activity going on with the Australian share market. First up, the board of Spotless rejected a bid from Pacific Equity Partners. That bid was priced at $2.63 per share. However, Spotless's share price closed at $2.42, suggesting the market doesn't think that PEP will come back with a higher offer anytime soon. In contrast, Maryborough Sugar Factory recommended a bid from Thailand company Metafol. Now, the bid's priced at $4.45 a share, and what's interesting is that MSF's share price closed at $4.47, which means that a counter bid could be in the wings. Brambles had a good announcement. Didn't do much for the company's share price, which was actually down over the week, but it's announced a 3-year $45 million contract with PepsiCo. And Origin, again, very little positive impact on the share price, but the company has announced a significant 20-year gas supply deal with Japanese power utility Kansai Electric. Now, you would have thought uranium stocks would have been sought after the government's backflip on the sale of uranium to India. However, when you look at the share prices of Paladin, Extract or ERA, really it wasn't positive at all for them. However, junior explorers like Bannerman Resources, for example, had a banner week, up 10%. And the Commonwealth Bank had a very good first quarter profit at $1.75 billion, up 9.4% on last year. However, the company said that the outlook was challenging. As a result, the share price of Commonwealth, NAB, Westpac and ANZ, they all fell. And finally, BlueScope Steel down a whopping 16% at a time when the company wants to pay its board even more money. Winner of the week is Deep Yellow, up 24% after the government's backflip on uranium sales to India. Loser of the week is Aston Resources, down 20% after a boardroom coup engineered by Nathan Tinkler.